What if I told you there's a company quietly building the backbone of AI automation, a stock that's trading at a fraction of Palantir's valuation, but arguably more room to run? This company is UiPath, and in this video, we'll break down why this could be the next Palantir, from fundamentals to price action, key metrics, and the catalysts that could set the stock on fire in 2025. For those that don't know, UiPath is a leading enterprise automation company founded in Romania, now headquartered in the New York. They're currently trading at around $17 a share. It's been teetering at that level 17 to 19 in the last few days. They specialize in robotic process automation, which is basically using software bots to automate repetitive tasks in businesses. They're used in many different companies, and I've been seeing it in even like where I've been working in the past. Think of UiPath as the digital workforce provider. So instead of hiring more people to do manual workflows, companies can deploy UiPath's platform to streamline everything from invoicing to data entry to tasks like this that can be done by robots but now oversighted by other people. They serve over 10,000 customers worldwide, including big names like Uber, NASA, PwC. Their mission is accelerating human achievement by making automation accessible to everyone. The recent price action has been very volatile, I'll say. After its 2021 IPO, the stock has crashed over 80% from all-time highs. But in 2024, we saw a new story starting to form, and now in 2025, it has kind of shifted. The stock has rebounded off its lows near 12, and it currently trades around 18 to 19, showing signs of a higher low base formation, which is where the stock is kind of laying at right now, as we can see. And this manual thing has also caused more institutional interest to start backing into the company. As we've seen, over 76% of the company is institutional owned, and we're continuing to see lots of big buys coming in, lots of analyst predictions coming in. And I want to point out that high institutional ownership is usually a positive sign of quality, stability, and confidence. But there is worry also in the extremely high levels, which can cap future inflows and increase downside risk if all these institutions decide to sell. It's way harder to capitalize on a stock like this, where like a big drop on earnings is almost guaranteed given the high institutional ownership, whereas low institutional ownership, it's more of a retail focus. The company also recently announced the AI-powered automation copilots, which integrate GPT-style LLMs into their workflow platform. Similar kind of to how Palantir has embedded AI into the Foundry, and how we've seen AI continue to evolve and make its way into the real workforce. This marks a strategic shift for the company, and I don't think they're no longer an RPA, which is the main thing everyone's talked about, and how the technology is not as great as it could really be. But I think it's becoming an AI automation platform, and that's very big for the future of I think workloads and everything else. So here are some of the key numbers and financial metrics I think that matter. Look at the revenue that came up from 1.5 billion, which is up 19% year over year. This is a solid double-digit growth despite enterprise software spending tightening. Also, I want to point out the ARR. This time it was at this level it was 1.5 billion, a key metric showing stickiness of their platform and how this is actually going to correlate. Also, 85% gross margin, which is comparable to some of the top companies inside SaaS. And it's not only this, but we want to point out the free cash flow, 303 million last year, which is positive and growing, signaling operational discipline, and that they're at that level where they're going to be able to continue to grow and continue to invest inside their technology. The valuation is only at $10 billion, which is versus Palantir's $60 billion. Path trades at around 6.5 times sales, whereas Palantir is over 15 times sales. That's a big multiple gap. So essentially, you're getting a high margin, growing AI automation company at less than half the valuation multiple of Palantir. And I think this is something very optimistic to look at, and one of the things you must analyze before you do your investment into this company. Analysts are also currently optimistic. We've seen over 23 different analysts with a consensus price around 22, implying moderate upside. But several analysts, like Needham, is one of the main ones I've been reading, and they see it as a top AI infrastructure play that is under the radar, and I would have to agree with them, because once this is this is completed, they have so many customers. They're vertically integrated. Their their long-term automation is always going to exist, and I think they're in a great position to continue to grow. Not only this, we've also seen the insider sentiment is stabilizing with not major sales happening recently, and the retail attention is still relatively low compared to Palantir, which means the hype circle hasn't started yet. But been seeing posts such as this one on Wall Street Bets showing off the stock and how it can really create the future, and how like call options may even be a good option, because this stock is really at that level where it's right about to break out, and I think we could see a move up to 50 and 100 by next year. So I think you want to keep that on your mind. And one thing I want to point out now is the charts. There has been a forming a rounded base since mid 2023. There's strong support around the $15 mark, which is where I drew this line here on the chart. But the breakout level, on the other hand, is at 20. If this stock can break the $20 mark, as we've seen in the past, this is a clear break above the zone with volume could trigger a momentum run towards 25 to 27, where the prior gap exists in the stock. Another thing I want to point out is how the 50 to 200 day moving averages are curling upwards, and including a positive trend reversal. Technically, if we're looking at it from a standpoint, Path looks like Palantir back in early 2023, mid 2023, right before it obviously did what Palantir did. I think it's right at that level where it's right about at the cusp of real earnings and real growth inside of a stock. And I think we could see these types of returns in the next few years. I see UiPath as one of the most underappreciated AI infrastructure plays out there. While Palantir focuses on data integration and analytics, UiPath focuses on execution and automation. They complement each other and they don't compete with each other, which is one of the main things I think a lot of people don't understand, and why this can be really such a big company. With high margins, sticky ARR, strong FCF, and a massive TAM in workflow automation, Path offers Palantir-like upside with less hype baked in already, and a lot more growth on these quick trade levels. I personally view this as a medium to long-term compounder if AI adoption accelerates in enterprises. To sum it all up, I think UiPath has quietly positioned itself as a core player in the AI automation wave. The fundamentals are very strong. The valuation is very reasonable for a company that's growing at this level, and the technicals suggest a potential breakout. If sentiment catches up, I think Path could be the next Palantir story stock of 2025 and 2026. Keep an eye on the upcoming earnings and any major enterprise partnerships, which could be the next catalyst to light the spark. Leave a comment, guys, with any other stocks you guys want me to check out. Make sure you like, subscribe. Have a great day. Peace out. Thank you.